On the data front, we saw yesterday Kenya's inflation rate dropped to 3.09% in October from 3.21% in September. And it's really been a drop in telephony charges that's amongst the standout features there. Your reading of that latest set of data?
Good morning, Alishia. Thanks for having me on. Yes, we've seen that we have the new calculated inflation rate, and I think it's a good sign to see that the voice calls have actually impacted positively on this, because you find most of the households have to use the phones. Most people conducting business also use the phones, and they have to keep calling. So it's really been, it's gone a long way, yes, but I still think a lot needs to be done on other basic commodities. We're talking about foodstuffs, we're talking about milk, we're talking about wheat products, which we saw increase in price over the past couple of months. So yes, it's a start, but I still think we have a long way to go before we can comfortably sit back and say inflation is going down.
Well, we've had Kenyan call tariffs having dropped by 50%, and of course this was triggered by a price war that had started off started off by Zain, and spelling good news for the consumer. For the telecoms players themselves, though, one would assume not so good news. I mean, what are you anticipating on that front and the kind of impact it's set to have on a player like Safaricom?
Safaricom finds itself in a catch-22 kind of position. I'm waiting for them to release their half-year results next week and see how this plays itself out. We also have a new regulatory policy take effect from yesterday, 1st November, about the pricing, and we've had the CCK reduce the interconnection fees for these mobile providers. So Safaricom is in a very tight spot, considering 80% of their revenue comes from voice. They may have to boost their other sources of income. Maybe they'll have to talk of M-Pesa, their mobile money transfer, or they may have to beef up their data services. But all in all, Safaricom should, I think, is really a stable company. Yeah. I think it has a lot of potential, and looking on, I don't think it's going anywhere.
Well, certainly Safaricom has no illusions about possible loss in market share due to the intense competition, and saying that voice will be affected first, but that data moving forward will form a key part of their strategy. How have you been positioning yourself in the stock, though? Because it seems that it's been foreign investors more so who've been taking up positions here.
For one, I think it's important to consider that at 4 shillings 85 cents, 4 shillings 95 cents, it's a very good entry price for any investor willing to take a position, and it's a very affordable price. And looking at the trading PE of about 13.75, it's also good. Looking at also the prospects of a hot market share, we've had this price wars take place for 2 months. So I'm guessing by next week, whatever we see in their half-year results may not be reflective of this price wars. We may have to see that maybe come next year. So I think for investors who are maybe considering Safaricom as a potential investment counter, this is the best time to get in. I don't see it going below 4 shillings and 8 cents anytime soon.
Well, of course, yesterday marking a key day for the company, where we've seen the new CEO, Bob Collymore, take his seat at the helm. In the meantime, amongst the numbers, the market is waiting for earnings out of Kenya Airways as well. We had quite encouraging passenger numbers released late last week. So we could assume fueling a lot of optimism when it comes to these results, which are expected at the end of this week.
Yes, looking again, Safaricom and Kenya Airways both have their years ending in March, so we will see the half year next week. And I think Kenya Airways is one of the most discounted stocks trading on the stock exchange. If we were to look at the book value of the stock, it could be above 60 shillings. Trading at 45, 44 shillings, it's really discounted. It's undervalued in my opinion. And looking at maybe if an investor is to think of maybe the cost of capital and to look at the return of capital on this cost, Kenya Airways has a lot of potential. We saw them last week reduce their flights to Mombasa, putting them at par with some of the smaller airlines, and moving on to the last 2 months of this year, which is the holiday season. I think they'll cash in on a lot of it. So I think Kenya Airways is in the right path. They're doing the right marketing moves.
especially with the tourism rebound seeming to be on the cards. TPS Arena, the other player that investors could indulge in to reap some of the benefit of that tourism rebound that's being anticipated. It's been a very active share at the Nairobi bourse for the longest while. It's sitting now at 70 shillings of 50, which is a 37-month closing high. Would you be buying into that stock?
To be honest, that is a sell. I think it's a good exit price. But if still the same, if you look at the long-standing economic value of the stock, and if you look at the fundamentals, we look at the stock coming out of a rights issue barely 2 months away, and we look at that rights issue being floated at 48 shillings and the current high at 70 shillings, it's still a company which has a lot of potential. It could reach 80 shillings. It could reach 85. We saw that with another stock, Scan Group, which had the same prospects. Also looking at the industry it finds itself in, the tourism industry, which has been projected to have revenues of 100 billion by next year. I think the prospects are really good and it could be a buy, but I would say for most of the shareholders, it's actually a sell at 7 shillings.
Well, certainly a good exit place if you've been holding on for a year. That stock over the past year having gained close enough to 100% so far.